Hey traders, it's Jeff Yates coming back to you with a quick market rundown for the week ending on May 30th. Let's talk about how the market moved this week, which sectors are heating up, and what to look for the outcome for next week. No fluff, just the essentials here. All right, so this week the major indices closed with solid gains. If you're watching the S&P 500 today, a lot of it kind of V-bottomed today. It came back to 1.9%, one of the best week of the month. Actually, it was the best week of the month. The NASDAQ rose over 2%, driven by tech again on that bounce. The Dow gained 1.6%, even the small cap Russell gained 1.3%. That was pretty eye-opening for that weaker sector. So what's fueling this? A key inflation number called the core PCE came in cooler than expected at 2.5%. Now, this gave traders hope that the rate cuts might come in, be off the table sooner, or beyond the table sooner than later. Let's break down those top sectors. Tech led the name to change today by Zscaler popped on earnings. And Tesla's buzz around the upcoming robo-taxi helped, really kind of fuel this drive as well, and the momentum. Consumer discretionary was a mix. Ulta Beauty jumped 14% on strong numbers, but the Gap store for apparel dropped hard over the China and tariff concerns here this morning. Energy caught a bid too, and that's obviously been thanks to the lower oil prices. So what's next? What are we looking for now into next week? Looking into next week, here's what I'm watching primarily. The key employment data drops, always a potential market mover. Any rate cut hints from the Fed in upcoming commentary, key thing, watch the news on those things because it can help you drive the next 2 to 4 days. As geopolitical noise, especially US and China, tensions are starting to creep back in, volatility might tick back up. So let's be ready with defensive stocks and earnings and watch trades. All right, hold a second, I'm gonna show you some of the sectors. Take a look also at the job openings. This is the JOLTS coming out on Tuesday, so be mindful. This is the job openings. This is less the actual people that get laid off or the net gains for the people that actually leave. This is a survey that's probably as important or most important than the initial job that's claimed there on Thursday. So watch Tuesday, Thursday, and again on Friday on the non-farm payrolls, always a big market mover. Let's take a second here and look at the S&P 500, give you a better perspective on where we might be overall. Okay, S&P 500, you can see a big amount of supply in here. Now this one I added the Bollinger Bands here to give you a perspective on this Liberation Day move here. Everything kind of consolidated inside of that. Not hard to have inside days after that big move of a day. And then we finally got traction and moved higher. Now I also noted here the 20-period moving average on the daily chart by default is the midpoint of the Bollinger. So once we actually got above the 8-period moving average, the dotted white line here, and got above the Bollingers, notice we didn't actually go down below the 8-period moving average until probably last Friday we closed below there, which created a little bit more of a downfall. We had the 200 in here and pivot for protection. This is a 200 SMA on the daily chart. But more importantly, if you look at the trend line overall, when it finally got this far in and it cleared that high, drew this trend line here, you can see the market held on for heavy, trying to make sure it did not wreck this pattern. Now, the trend line's a little bit steep. It should be about in here. Look how steep that trend line is. Very aggressive V-bottom, if you will, mix in here. So there could be some profit taken. That's why the market's shuffling around in here, because I think that mix up here made a lot better gain than maybe people anticipated for that thing. So it's very too steep of a move high here, so it might even plot around. But again, if you notice how the market worked its tail off to get right back up inside that trend line in here, which means that we could start to tick up here, at least back up to the 613 levels in the SPY here. So again, keep an eye on that. Let's take a look at the Qs. Similar, right? Very similar here. It didn't quite make that top here because technology sold off today. It had a hard time getting back above the trend line, but it was respectful. It was respectful, got back above here. Everything's intact as far as the Bollinger, the midpoint of the 20s, the 8-period moving average, your supply on the left, as you might know. IBM, or IWM rather, you can see a lot less of a menu here. You can see we're not at these highs. We're well below. We're still back into the ultimate downtrend line after the move lower. So, but it did have a notable week overall. And I guess that's because we gapped down here. Last Friday we opened up and then we're down here. So a 5-day period, we did finish much, much higher. And again, trying to hold the midpoints here on the 20-period moving average. So not nearly as clever. Could be maybe hinged on some recent earnings coming out here that's going to affect how this is going to go up. You have the flat 200 daily on the right above it here, so that's never a good sign, but we'll see where that goes as well. Right now, looking for job openings next week. We want to see how the JOLTS kind of come in on Tuesday. Be mindful if those things fail. Be mindful and be ready for some consumer defense stocks that maybe you can buy puts on. All right. Hope to see you next week. Have a good weekend.